Forget everything you think you know about emerging market bonds, because right now they're sitting there like a loaded gun, one wrong move and it's over. The truth is, diving into these markets feels like walking a tightrope over a pit of fire. You know the payoff could be massive, higher yields than developed markets, diversification that actually moves the needle, but the risks, they're screaming at you. Currency swings that could wipe out your returns overnight. Political chaos that uncertainty doesn't even begin to cover. Defaults lurking like shadows. It's terrifying, frustrating, and yeah, maybe you're pissed because no one's telling you the real playbook. Everyone talks about yield, but no one owns what happens when everything untangles and starts unraveling fast. So what do? Sit on the sidelines and watch others get burned or jump in blind and pray? Neither. This isn't about blind gambles or playing it safe mid-table. It's about owning the mess and ripping out the real opportunity hidden under that risk. Here's the cold hard truth. Don't just buy emerging market bonds because they sound sexy or because someone on Twitter said it's the next big hit. You want to fight risk with control. That means slicing your exposure like a surgeon, not a gambler. Go deep on sovereigns with credible reform stories, not cash-strapped countries running on old policies and empty promises. Look for bonds tied to economies that are on the upgrade track, not the slow-motion collapse track. That usually means those with clear fiscal frameworks, improving debt metrics, and a central bank that actually has a spine to do what it takes to defend the currency. Forget chasing high-yield junk in unstable regimes. Focus on names where you can read the roadmap and understand how they get out of trouble. And here's a pro tip most investors overlook. Hedge your currencies. Don't just accept currency risk as a fixed cost of entry. It's your enemy, your saboteur. Use forward contracts or currency options to lock down the downside or tilt your portfolio towards bonds issued in hard currency but linked to emerging markets. That's the kind of tactical move that turns risk from a blind leap into a calculated push. Another brutal reality you need to face. These markets do not reward ignorance or laziness. If you're just scanning headlines and chasing rates, you're going to fail. Get granular, study political calendars, inflation trends, capital flows. Know which emerging markets have upcoming elections that could shift power drastically or social unrest bubbling under the surface. Don't buy into diversification as a magic bullet. Make sure your exposure is active, nimble, and ready to reposition at a moment's notice. These markets talk fast, and you need to talk faster. Bottom line, emerging market bonds right now are a battlefield. But it's also a battlefield you can dominate if you stop chasing hype and start playing defense and offense simultaneously. Cut the noise, double down on research, control your currency exposure, and build a dynamic set of positions that aren't just about yield, but about survival and growth through volatility. This isn't a passive buy and hope. This is an active game for those who want pain, but don't want to get crushed by it. You either own these markets smart, or you get left behind while others are stacking real returns. The pain is real, but so is the upside if you have the guts to navigate it without getting played. So, wake up, stop apologizing for being cautious, but get ruthless when it comes to building your edge. Own the risk, own the payoff. Don't let fear or ignorance dictate your next move. Make it precise, informed, and unshakable. Your portfolio isn't a charity case, it's your power. Treat it like one. Subscribe to our YouTube channel and check the featured link to discover more.